You're watching Daily Market Pulse. Today is Monday, April 13, 2026. If you want a clean daily read on macro and market risk, subscribe for the next briefing. Oil is setting up for a massive breakout to $250, while the Fed faces an inflation dilemma that could derail the entire pivot narrative. Here's the framework for today's briefing. Oil's $250 breakout setup. Why patience could pay off massively. Supply shock inflation risk. Middle East disruptions threaten food and energy. Fed policy pivot in jeopardy. Hawkish stance may persist longer than expected. Crypto liquidity squeeze. Short-term headwinds versus medium-term opportunity. Daily financial market update. Live prices, gold, silver, crypto, equities, U.S. bonds, and trend. Let's start with what's happening in oil markets. Oil markets are in a consolidation phase rather than experiencing a collapse, with analysts maintaining a long-term bullish target of $250 for WTI crude while waiting for optimal entry conditions. This patient approach suggests the market is building energy for a significant upward move rather than experiencing weakness, with delayed execution potentially increasing both the probability and magnitude of a future rally. Traders are avoiding shorting positions based on current stagnation, recognizing that apparent stability could be a precursor to a major breakout. What to watch next? Monitor WTI price action around key resistance levels and any geopolitical developments that could serve as the catalyst for the anticipated breakout. Now let's examine the geopolitical backdrop driving this setup. Geopolitical conflicts in the Middle East are creating physical supply shocks in oil and sulfuric acid, threatening both energy supplies and fertilizer production that could impact food prices. These aren't financial market disruptions, but real physical shortages that could force a shift from an efficiency-focused economy to a resilience-focused one, potentially reducing overall productivity. Markets are beginning to price in supply-side inflation risks, with particular concern about the knock-on effects to food and energy costs. What to watch next? Track escalation in Middle East conflicts and monitor fertilizer production capacity, as well as any government policy responses to supply chain vulnerabilities. This supply shock dynamic puts the Federal Reserve in a difficult position. The Federal Reserve faces pressure to maintain a hawkish stance as supply-side inflation from energy and food sectors threatens to derail expected dovish pivots, despite a resilient labor market. Supply-side inflation is particularly challenging for central banks because it stems from real economic constraints rather than demand imbalances, limiting the effectiveness of traditional monetary policy tools. Bond markets are being identified as the most vulnerable asset class due to the potential for persistent inflation, while equities maintain support from AI capital expenditure and labor market strength. What to watch next? This week's CPI and PCE inflation data will be critical for assessing whether supply-side pressures are becoming embedded in broader price trends. Finally, let's look at what this means for crypto markets. Bitcoin and crypto assets face short-term headwinds as liquidity may be withdrawn from speculative assets to cover margin calls during initial supply shocks, though the medium-term outlook remains constructive. Crypto's correlation with risk assets means it's vulnerable during deleveraging phases, but its long-term trajectory depends more on broader equity market performance and Fed policy outcomes. Investors are expected to prioritize liquidity over hedges during initial shock phases, creating volatility as markets distinguish between a correction and a true bear market. What to watch next? Monitor crypto's correlation with equity markets and watch for signs of forced selling versus strategic accumulation during any volatility spikes. Now let us turn to today's live market snapshot, where gold, crypto, stocks, and bonds are actually trading right now. Now for our daily financial market update. Here is where the key asset classes stand as of Monday, April 13th, 2026. Gold is trading at $4738.80, slightly lower on the day, and is slightly lower over the past 5 sessions. Silver is at 74.51 cents, slightly lower today, with a 5-day trend of minus 1.0%. In crypto, Bitcoin is at $70,784, lower on the session and lower over the past week. Ethereum is at $2,187, slightly lower today. Other major crypto, Solana at $81.98, BNB at $597.33, XRP at $13267. On equities, the S&P 500 at 1689 strongly higher, the Nasdaq at 22.9 strongly higher, the Dow at 47,916.57 strongly higher. Internationally, the DAX at 2347.68 higher, the Nikkei at 56,502.77 strongly higher, the FTSE at 10,556 higher. On the bond side, the 10-year U.S. Treasury yield is at 4.32%, slightly lower on the session, and the 30-year yield is at 4.91%, slightly higher. Yields remain in focus as the market watches for Federal Reserve signals. Rounding out the macro picture, WTI crude at $104.58 per barrel, strongly higher. The dollar index at 98.96, slightly lower. The picture is mixed across asset classes, with no dominant directional theme yet. Investors are watching macro catalysts closely before committing to a clear risk stance. So what's the takeaway from today's analysis? We're seeing a classic macro crosscurrent. Oil markets are positioning for a delayed but potentially explosive breakout that could reach $250 per barrel. Meanwhile, supply-side inflation from Middle East disruptions threatens to keep the Fed hawkish longer than markets expect. For crypto and risk assets, expect short-term volatility as liquidity gets pulled from speculative positions. But the medium-term outlook hinges on whether AI productivity gains can offset inflationary pressures. The key inflection point will be this week's CPI data and how oil behaves around those critical resistance levels. Thank you for your attention, and we will see you again tomorrow.